Happy episode 2000. Welcome everyone to the #1 daily Bitcoin pod. In today's show, we'll be discussing Bitcoin buyer dominance at 111 suggests another wave of gains. Also breaking news, Bitwise research says that 427 billion of institutional money is about to buy 4.2 million Bitcoin. The supply shock is real. TikTok. Also, trader with 800 million Bitcoin long says he is not selling, he's buying. And in fact, he added to the position now 1.2 billion, literally risking it all. We'll also be discussing Lending ditches ETH, shifts to full custody model for the Bitcoin loans, as well as US Bitcoin ETFs near record month after 1.5 billion of inflows in 2 days. Also, Michael Saylor has a new Bitcoin prediction, and it is not $13 million. Also breaking news, $300,000 Bitcoin price by June is now the most popular call option. That's right, 300K in play within the next 30 days. We'll also be taking a look at the overall crypto market. All this, plus so much more in today's show. If you are new to the channel, very important, smash the likes, go ahead, subscribe, then ring the bell, turn on all notifications to receive daily premium crypto news alerts every single day, just like this. This is a very special day. It's episode 2000. That's right. This is CNA episode 2000. A huge milestone, as I've been doing this virtually every day for the past 7 years. So it feels good to be here, especially with Bitcoin hitting the new all-time high of 112. Price discovery is still in play. Some targets are 300,000. In fact, the most bullish of the bullish bulls are putting their money where their mouth is. That's the target right now. 300,000 by June. There's a lot of positions we're going to be discussing. Let's kick it off with our market watch, as we do each and every day. You should be able to see Coin 360. Let me know if you can see clearly on your screen. We have Bitcoin pull back some, currently down 2% on the day, still maintaining above 1087. We also have Ether down 3%, XRP, the bulk of the altcoin market all correcting, following the big dog Biddy. You already know. And checking out coinmarketcap.com. We're currently sitting on a 3.42 trillion crypto market cap. The Bitcoin market cap is $2.158 trillion. We got 169 billion worth of volume for the past 24 hours. And currently, Bitcoin dominance is an even 63%, with the Ether dominance even McGeven 9%. And checking out top 100 crypto gainers past 24 hours, we got 4 leading the pack, up 11%, followed by BitGet token up 7%, followed by the Hyperliquid up 5%. Which alts, if any, are you bullish on for the bull? Holla. And checking out the crypto bubbles, we get a visual perspective. Yesterday, virtually everything was in the green. Today, virtually everything back in the red. And zooming out for the weekly, I dare say 80-20 green over red. And zooming out on the monthly, the bulk of the market in the green, at least for the past 30 days. It's been pretty bullish for the past 7 weeks, and you'll see when we pull up the live charts in a little bit. Stay tuned. And checking out the infamous Crypto Greed and Fear Index. As of today, we're back in the extreme greed. The higher this number goes, the more likely of a pullback. Lo and behold, the number finally hit extreme greed for the first time in a hot minute. And we do have a little bit of an itty-bitty pullback. Yesterday, 72. Last week, a 71. And last month, a 72 in greed. And checking out the infamous time chain calendar. We're on block height number 898,009. We have literally 151,991 blocks until the halving of 2028. And as of today, you can exchange one fiat monopoly dollar for 918 sats. And before you know it, 1 sat per dollar equals $100 million Bitcoin. And if you don't know, now you know. So there you have it, bitty broskies and bitty baddies alike all around the world. Bitcoin is now number 4 top ranked global assets. Let's go, Greg. So let me share my screen, then we'll pull up some of the live charts. And again, this is special pod episode number 2000. That's crazy just saying that. And cheers to the next 2,000 bitty episodes. You should be able to see here, Bitcoin buyer dominance at 111,000. Suggest another wave of the gains. Can you handle the waves? Bring it. Check it. Bitcoin buyer remains dominant or buying on the exchanges as the all-time highs were met with the usual optimism. Data from Crypto Quant shows the 90-day cumulative volume delta favoring the bitty bulls, the CBDs. Let's get it. not CBDs, just hence, FYI. Bitcoin price all-time high continue to find support amongst the traders, with buyers staying dormant despite the market surging 50% in under 2 months. That's right. Analyzing the 90-day CVD, CryptoQuant contributor reveals the extent to which sellers have ceded control during that period. In short, buy orders have become dominant again. In other words, more buy orders are being placed in the market than the sell orders. This generally signals that the uptrend shall continue. Precisely. CVD measures the difference between the buy and the sell volume over the 3-month period, and until the mid-March sell side pressure dominated the order book, with the biddy hitting the multi-month lows of 75,000, God bless you, Nippinator, in early April. Neutral conditions prevailed until the buyer dominance re-entered in May. The summary of the situation is the price test above 110 and reaches a new all-time high. Buyers have not backed down. This could be setting the stage for another wave of the upwards momentum. Send it is all I gotta say. Hodlers have broadly refrained from distributing the coins to the market. At the current levels, daily profit taking is half of what it was when Bitcoin first reached 100,000 back in December of 2024, according to the research. While the price is 10% higher, and I see a massive contribution from the Oracle, she just gifted 5 memberships to the channel. So God bless you and thank you and congratulations, all the new members. I'll strike the gong for you after I read this story. And congrats again. And thank you so much, Oracle. You're a godsend. I appreciate you. So quoting the analyst here from Glassnode, older coins were much less active this time, signaling a stronger holding behavior. When Bitcoin hit the all-time high yesterday, total profit-taking volume was around 1 billion, less than half the amount of the unrealized Bitcoin first crossed at 100,000 back in last December when it hit 2 billion. Despite the higher price, profit realization was far more muted as the biddy bulls continue to do their thing. Just ask Scottie Pippen. Ask him about Satoshi. CryptoQuant notes that the price momentum increased after reclaiming the average cost basis for the Bitcoin short-term hodler cohort at just under 100 G's. Entities buying within the last 6 months. Bitcoin is rallying after reclaiming the short-term hodler average cost basis, a key level that often serves as a strong buy the dip indicator. Speaking of buy the dip, shout out to the NIP, the one and only former chairman of the SEC, co-host of the podcast. And in breaking news, Bitwise research says 427 billion of institutional money is about to buy 4.2 million Bitcoin. Talk about an incoming supply shock, very limited amount of the biddy as the institutional FOMO, like a mofo, continues. Also, a trader with 800 million Bitcoin long says he is not selling, he's buying. This guy is a madman. Shout out to the madman. James Wynn, quoting him here. They're coming for me exactly as I expected. I ain't selling. I am buying into them. Position value now 809 million. The bulls are greater than the cabal. I repeat, the bulls are better than the cabal. Amen. But it gets better. Operation F the Bears. Trader James Wynn just increases Bitcoin long to a new high of 1.2 billion. He's risking it all. Send it. And I love this operation. Operation F the Bears. Liquidate me. Biatch. Gotta love it. I love this energy in the market right now. And quoting the high priest Bitcoin, your holiness, Max Kaiser. Ramping up productivity means capital investment, means more borrowing, means higher interest rate costs, means more money printing, an inflation sensation from the Fed, who gives away money to the cronies who invest in non-productive boondoggles, means a U.S. bankruptcy is guaranteed. Couldn't have said it better myself, Max. So there you have it. There's the 1 hour chart. We have a bullish green target, bullish pennant in play. Sitting at 116 all day, every day. What more can I say? It's inevitable. Let me know when you think we'll hit that 116 bullish pennant here on the 1 hour chart. And we'll work our way backwards from there. Just take a quick look. Checking out the 4 hour. 4 hour chart, very lit, bullish pennant. We do have a target, same as the 1 hour, I believe, 116.3, as you can see live and on your screen. And zooming out from the 4 hour, let's take a look at the 1 hour. I mean, the 1 day, bitty broskies. The 1 day shows us we finally got a correction after 3 days of pure bullishness. Again, all-time high, followed by all-time high, price discovery. I can get used to this. Welcome to the summer, and let's get it. Bitty summer heat, we're bringing it like we're in Miami. Only I'm in Puerto Rico, and it's just as hot, just FYI. But you can see a big red candle correction today, but I think the bullish momentum is likely to proceed. You guys let me know your thoughts, and happy TGIF, by the way. It is Friday. Let's see if we get a little weekend bitty pump or if the correction continues. And checking out the weekly, nothing weak about this weekly chart. We have a rising wedgie, the only wedgie I approve of. And we have 1, 2, 3, 4, 5, 6. We're on our 7th green consecutive week. Even with the pullback today, we're still in the green for the week. So let that sink in. We're most likely going to get our 7th weekly candle green close here in a couple of days on Sunday Fun Day. And we also have a target on the weekly sitting at 124,000, which is a cup and handle target. And zooming out from the weekly, we take a look at the monthly. And the monthly chart says it's going up forever, Nippinator. That's right, according to the Nippinator indicator. Big bull candle already forming for the month of May. We still got a week left to put a bow on it. And last month was a green candle close as well for April. I mean, as soon as we entered Q2, pure bullishness. So the Bitcoin bulls are back in town. That's all I'm saying. But anyways, next story. We did our TA. We have a lot of news to share and a lot of excitement in the markets. The markets are doing its thing, of course. But let's dive into our next story of the day. Headline is Lending ditches their ETH and shifts their full custody model for Bitcoin loans only. Let me know if you've ever heard of this particular bitty lender. Again, LEDN. Ledin or Lendin, however you want to pronounce it. But let's break her down, shall we? Digital asset lender Lendin is transitioning to the fully collateralized Bitcoin lending and discontinuing support for Ethereum. Smart move. In moves designed to consolidate its Bitcoin-focused business and further safeguard client assets against credit risk. And I think that's a smart move. As you know, Bitcoin's volatile enough. Ethereum, extremely risky and even more volatile. So probably not the smartest to get an Ethereum backed loan, hence why they're no longer moving forward with that option. So it's best for everyone. In adopting a full custody structure for Bitcoin loans, Lendin will no longer lend out client assets to generate interest. The company disclosed on May 23rd. Instead, Bitcoin collateral will remain under full custody of Lendin or one of its designated funding partners. This means assets aren't rehypothecated, reused, or loaned out to generate yield. My understanding is Strike, Jack Mallers' company, is offering the same thing because I watched a video from him the other day. Strike just introduced non-rehypothecated Bitcoin-backed loans as well. So there seems to be a lot of competition stirring. And I think at the time when he made the video, Mahler said the rate was 12% interest, and he said by the end of this month, his goal was to get it down to single digits, which is ultimately hinting at 9%. Now, Reed said the move brings the company back to the roots and aligns more closely with the Bitcoin founding principles. Quoting him here. Bitcoin was created as a direct response to the risk of fractional reserve banking and unchecked use of the client assets to generate the interest. Good point. Traditional finance relies on constantly reusing the client assets to create leverage and ultimately inflation. Bitcoiners instinctively reject that model. That's why we've moved away from this approach entirely. And rather than fragmenting the platform to chase marginal volume, they say we're going all in on the bitty and simplifying our stack to reflect what our clients actually value. Well done. Founded in 2018, Lendin has emerged as one of the largest lenders in the digital asset space with a loan book value of $9.9 billion. According to the Galaxy Research, the company enables Bitcoin holders to borrow against their assets, giving them access to liquidity without having to sell their holdings or trigger a taxable event. This approach is commonly used by the wealthy investors who take out low-interest loans against stocks, real estate, and other assets to access cash. Now, here's the caveat. I'm going to assume it's this way, as all the lenders I'm aware of in the Bitcoin space, typically your longest term is 1 year. So that's kind of the caveat. It's not like you can get a 30-year Bitcoin-backed loan, unfortunately, or everyone in the world would already be doing so. But anyways, Bitcoin's Genesis block was mined in the wake of the global financial crisis in 2008, offering a world-of-sound money alternative to the inflation-prone fiat money system. Bitcoin now thrives within traditional finance, especially after the successful launch of the Bitcoin ETFs. In 2011, BlackRock alone has generated over 600,000 Bitcoin, and the institutional FOMO is no joke, hence why it is in full effect. Institutional FOMO, like a mofo, not slowing down any day soon. Let's continue with the news of where we left off. Next headline, U.S. Bitcoin ETFs near record month after $1.5 billion of inflows in the past 48 hours. That's right. Check it. Spot Bitcoin ETFs in the U.S. are heading for the record-breaking month, helping push Bitcoin to new all-time highs amid the rising institutional demand. The U.S.-listed spot Bitcoin ETFs recorded more than $1.5 billion in combined inflows over the two-day period, with $608 million on May 21st and $934 million May 22nd. A repeat performance of the past 2 days of inflows would see monthly inflows surge to $6.68 billion, surpassing the monthly record of $6.49 billion from November of 2024. ETH inflows helped Bitcoin rise to new all-time highs of 112, which is current price discovery, on May 22nd, which was just yesterday, before retracing to 110 on the 23rd, still up 19% in the past week. Not too shabby, and like I said, past 7 weeks, pure bullishness, as we saw in the charts. The robust ETF inflows at a bitty rise at a new all-time high signal growing institutional demand and rising realized profits without the increased selling pressure. Institutional inflows, corporate balance sheet moves, and macro dislocation converge into the clear message: Bitcoin is no longer the alternative. It's becoming the benchmark. Recent surges of the ETF demand coincide with the $1 billion worth of the Bitcoin being withdrawn from Coinbase, and a move analysts view as a signal of increasing institutional appetite. And word on the street is institutional inflows will push Bitcoin to 200,000 above and beyond. That's right. The structural inflows from the institutions may help Bitcoin surpass that 200,000 base case before the end of this year, according to Bitwise head of research, quoting him here. So the base case is 200 G's, baby. Conditional, on the U.S. government not stepping in. If they step in, we'll move closer to 500. And guess what? You absolutely know they're stepping in. Of course, they're going to print and do what they do best. So, and then, of course, Trump has the go-ahead to continue with Bitcoin acquisitions through the budget-neutral strategies as the game theory continues around the world. Bitwise's in-house prediction for 2029 is 1 million. I say that's pretty bearish, but hey, what do I know? Is what it is. And also, as far as the top assets in the world, I believe we're now number 4. So did we just surpass Apple? Someone told me we were number 4 earlier. According to this chart, we're number 5. So you guys verify that for me. Gold is currently 22.3 trillion market cap and still over 10 times larger than Bitcoin's 2.2 trillion, which makes Bitcoin the world's 5th largest asset, according to the coin market cap data. And if you don't know, now you know. Next story of the day, the latest from the Giga Chad, Mikey Saylor. Headline reads, Michael Saylor has a new Bitcoin prediction and is not 13 milli. That's right. Saylor believes Bitcoin will hit 13 million by 2045. But he also says that his company will become a $10 trillion company. And you know his big idea is to become the largest Bitcoin bank in the world. And obviously, he already controls a massive amount of the Bitcoin supply. I think it's roughly 3%, just shy of what BlackRock has accumulated. But let's now dive deeper. MicroStrategy, now branded as Strategy B, could soon be the most valuable publicly traded company on Earth, according to its own analyst, Jeff Walton. So shout out Jeffster, quoting him here. Strategy will be the number 1 publicly traded equity in the entire market, he said to the Financial Times documentary. Saylor's $40 billion Bitcoin bet. His reasoning, Bitcoin. Lots of it. He makes a good point. The company now holds 568,840 BTC, worth $59 billion. Good Lord, Michael. And Walton believes that the pile of digital gold is unmatched, quoting him here. Strategy holds more of the best assets and the most pristine collateral on the entire planet than any other company by multiples. It is not just the Bitcoin stash. It's the ability to raise capital fast. In late 2024, Strategy raised $12 billion in 50 days, something Walton calls insane. I dare say insanity. Now, Saylor, the company chairman and co-founder, Mikey Saylor, is even more bullish. He told FT that he believes the company can 100x from here. MicroStrategy is in a position where we can grow from a 100 billion enterprise to a 1 trillion enterprise to a 10 trillion enterprise. That vision is tied directly to the Bitcoin price. Saylor predicts Bitcoin to hit 1 million within the next 10 years and 13 million per coin within the year 2045. If that happens, our company becomes the most valuable in the world, and there's no doubt he'll probably hit that target. Still, the risks aren't lost on Saylor. He emphasized even if Bitcoin were to crash 90% and stay down for years, we would still be stable. So take that, bears. I mean, a lot of you guys are wishing on his demise and his company, but so be it. We'll see who gets the last laugh. MicroStrategy has a market cap of 117 billion. So to hit 10 trillion, it would need an 85x. A moonshot even by Bitcoin standards. Now, if MicroStrategy was to 85x, what do you think will happen to the Bitcoin price? Let that sink in. But if Bitcoin does reach the 13 million mark, as Saylor envisions, then maybe, just maybe, strategy won't be a bull bet. It'll be the biggest win in corporate history. So if strategy were to be valued, let's do some math, at 10 trillion, based solely on the current Bitcoin holdings of 568,000, each Bitcoin would need to be worth 17.6 million per Bitcoin. That would place the crypto far beyond the current projections, validating strategy's long-term bet on Bitcoin as the superior store value. So you already know. And at the current price, I guess when this article was made, we were only 104. So they would need 96 million Bitcoin to be worth 10 trillion. Obviously, Bitcoin price is up a little since then. To reach the 10 trillion valuation, strategy would need to surpass every asset on earth except gold, beating Microsoft, Apple, and Bitcoin itself. Good luck with that at 2 trillion, because naturally the bigger strategy becomes, the bigger Bitcoin becomes, and vice versa, as it's ultimately a Bitcoin treasury company. Now for our feature story of the day. $300,000 Bitcoin price by June is now the most popular call option. And here's the proof of work on that. And shout out Vivek. He's a great account to be following on X, by the way. He's the one who shared this open interest by the strike price. And there's actually an article surrounding it. So I'm going to share this. The headline reads, Bitcoin price prediction June, which is next month. Literally a week around the corner. Bitcoin option traders are betting big on the 300,000 strike price by June of 27th. And as I pointed out a little earlier, there's this trader, legendary trader by the name of James Wynn. And he says, they're coming for me exactly as I expected. I ain't selling, I'm buying into them. Position value now 809 million, a massive 40x long. And he says the bulls are greater than the cabal. I couldn't agree more. And then he had to step it up again. And he put Operation F the Bears, liquidate me, biatch. And he ultimately increases Bitcoin long to 1.2 billion. And he's basically daring the bears to liquidate him. Operation F the Bears. I mean, don't get no greater than that. So long live the king. Let's go, Biddy. But anyways, Bitcoin price hit a new all-time high of 112 yesterday. In fact, we did a Biddy pump watch to celebrate. Let me know if you're on the live stream. There's a strong consensus right now amongst the experts that Bitcoin still has substantial upside for the short term. It's going to be a hell of a bullish summer, with 150 emerging as the plausible target for the second quarter. However, option traders are significantly more bullish with their Biddy price predictions. According to the CoinGlass data don't lie. Deribit's far out of the money Bitcoin call option with a 300,000 strikey price expires on June 27th, and it currently holds the highest open interest across all Bitcoin options contracts. Let that one sink in. So despite the long shot, the Bitcoin price rising to 300,000 or more by June 27th, literally a month out, is currently the most heavily backed bet in the options market. That means the bulls are betting their Bitcoin on this particular target happening. Let me know if you agree or disagree. 300 G's next month. Holla at your boy. Now, Deribit's Bitcoin June 27, June 25th, 300,000 C is currently the largest single position in the Bitcoin options market with 5,593 Bitcoin worth of open interest. That's a lot of bets. Deribit's Bitcoin call option with a strike price of 120,000, expiration date of June 27th, comes in at a distant second. So again, the majority are all betting on $300,000 Bitcoin by June 27th. If that comes into fruition, good Lord, we're going up forever, Laura. So for the uninitiated, call options are contracts that give traders the right, but not the obligation to buy the Bitcoin fixed at a specific price by a specific date. Traders typically use them to bet that the Bitcoin price will either rise, and if the market price exceeds the strike price, the option can then be exercised for a profit. The Bitcoin price exceeding 100,000 by June 27th is nearly impossible despite the soaring global liquidity and easing financial conditions. However, it's likely traders are using the $300,000 Bitcoin call options as cheap lottery tickets. Given the low probability of Bitcoin reaching 300,000, the premium on these contracts is currently very low. However, if Bitcoin were to surge rapidly to around 125 to 130 by the end of this month, within the next week, the value of these options could then spike, allowing hodlers to sell them for a significant profit, even if the strike remains far out of the money. Nevertheless, even this scenario paints an extremely bullish scenario for the Biddy in the coming weeks. So let me know your thoughts. And they also publish here realistic Bitcoin price prediction, what's most likely expected by the end of the second quarter. And we're only 1 month deep into the second quarter, by the way. Still got a bit to go. Ignoring the June 27 expiration date, Bitcoin call options with 120,000 strike price currently have the highest open interest. Smart money investors are therefore betting heavily that the Bitcoin price will far exceed 120 in the coming weeks. I'm a firm believer of that. I think that's easy peasy. However, global liquidity remains the best indicator for the Biddy price trajectory. Quoting GMI co-founder of the M2 Money Supply, he says, accurately predicted the April 7th bottom for Bitcoin. Now it's forecasting Bitcoin price will reach 160,000 mark in the coming weeks. Well, here's the deal. 300,000 is a hell of a target, but if we fall short and only hit 160,000, are you going to be complaining, Biddy broskies and Biddy baddies? Let me know. Quoting Raoul Pal, maybe, just maybe, it was this easy. I'll chat more about it and drink with the Raoul Pal. But anyways, there you have it, yo. Let me know your thoughts on the 300,000 Biddy strike price for June 27th. I'll read your comments out loud. Welcome, everyone, to the Q&A segment of the live stream. It's good to be here. This beautiful, fantastical day. And shout out Robbie P. We haven't played his classic in forever, Bitcoin Slang. And if you don't know, now you know.
Hey, pay attention on how I break this Bitcoin slang down.
Check it. Follow the money is my thought. There you go. Why are they betting on that? What do they know that we don't know? Are you referring to that, those strike prices or that $1.2 billion 40x leverage from the historic trader, Mr. Wins? Either way, the bulls are in control. The bulls are bullish. We haven't seen this type of bullish momentum in forever. So game on, next leg up in play, price discovery, send it, make my motherfucking day. Just saying.
Check it, a Bitcoin is a currency, blockchain is technology, transactions take place on it constantly.